The Fed and Wall Street are playing chicken with each other. The average person, traders, passive investors, people just dumping money in the stock market and ETFs, their 401ks, pension plans, they are the ones that are playing chicken with the Fed. And this is the conundrum that everyone finds themselves in. This is why this is so important to you, because your money, vast majority of people have just passive investors just dumping their money in the stock market, thinking buy the dip, buy the dip, buy the dip. We've showed you this chart here again in our daily market updates. We show you it's broken out of multiple channels here. The rates, the yields have been continually spiking higher over the last year and have broken out of this channel. And we have so much global debt right now that it has to be flushed out somehow, some way, somehow. They're probably going to print. They probably will turn around in like a year or two, whatever it is. But the Fed here, let's read some of this. The yield on the 10-year Treasury note, which is the bellwether. It is the thing that everything is derived. Everything in the world is derived off of this. The stock markets, everything, equities, whatever it is. It's credit cards, mortgage, everything. Everything is derived really from the 10-year. They topped 3.7, not seen in more than a month, as investors adjust their portfolios for a higher terminal rate. Here's the thing. Richmond Federal Reserve President Thomas Barkin was among the latest, wow, I can't speak today, the latest officials to acknowledge that the U.S. economy is slowing, but warning that it's fundamental. Listen, it's fundamental to continue hiking to ensure inflation doesn't get entrenched. So they're saying, just like Powell kind of said in the last week or so, they're committed to raising rates further. This is where it gets interesting. Investors now see the Fed raising the Fed funds rate to 5 to 5.25, with the world's most influential central bank delivering a 25 basis point hike in March and May before pausing. Will they or will they not? Looking ahead, Wall Street and the Fed are again in a standoff. They are playing chicken. They're two speeding trains. Who is going to flinch first? On the future path of interest rates, with the former Wall Street, really the average person betting on rate cuts later this year, thinking, again, the curve is showing us that same thing. The yield curve is showing us, it's gonna be they got to cut here, which the debt market usually isn't wrong. The debt market really isn't wrong usually. This is where everything's priced in. The stock market is a derivative from this. Everything is a derivative from this, right? We continually say that. So if you could get the channel to cooperate with us, so we can see that channel there. And the latter reaffirmed its view that the interest rates will stay higher for longer. So this is what's really interesting. This is the thing everyone is arguing about. This is the thing that's spooking the markets right now as well. Really, for the most part, oil is jumping. This is what's spooking the markets. People are like, oh boy, these guys are kind of hawkish. Like maybe they're not going to cut things. Maybe they're not. Maybe we can't just keep buying the dip. And this whole Fed put everything, is that coming to an end? It looks like it might be. At some point, it has to. We have so much debt that at some point the free market has to say, no more. At the same time, though, the financial repression model, deflation can't happen here. Ben Bernanke, IMF paper, deflation can't happen. We're going to do financial repression and printing our way out, just like Lynn Alden has her great workup talking about the 1940s and how the United States government got out of this very similar situation, albeit not the same, but a similar situation. They're going to likely print at some point. But the answer, or the question is when, and no one knows that answer. This is what Stan Druckenmiller just came out the other day and said in his 40 years, he's a billionaire, right? This guy is very smart, great trader. In his 40 years, he's never seen a more challenging macro environment than he has right now. So that makes me feel good because I feel like I've been going crazy really the last handful of years, last 5 or 6 years, but truly in this last year or two, driving people insane. This is, again, why I say, hey, I've got my chips off to the side. A lot of it, just staying in cash, being very nimble, right? Because if inflation plays out, okay, we can go buy some stuff. We are still hedged with Bitcoin, gold, silver, real estate, things like that. But if we're wrong, if there's deflation, the dollar keeps rising, the interest rates keep going up, and this thing keeps popping, then great. We can go buy assets real cheap at that point. So one way or another, this is going to come to a head, and we're going to figure out here probably in the next 6 to 18 months, I'd say. Next 6 to 12 months this is what's going to happen. But this is the chicken, playing the game of chicken. Who's going to flinch first? The two trains speeding at each other. Is it Wall Street with saying, oh, no, we're definitely going to cut. We're definitely going to cut. Wall Street was thinking that last year, too. I was thinking that last year. I think dang near everyone, for the most part, thought, hey, there's no way they're going to be able to cut more than a couple times before the markets freak out and there's a credit crisis and things lock up and we got to just inject liquidity back in the market. So the economy has been more stable than dang near anyone thought it could be. and the Fed's kind of lucked out in a way, and people are getting squeezed. There's jobs getting cut everywhere, but there's a ton of, as Larry Lepard says, there's a ton of liquidity sloshing around in the market still. Tons of cash, tons of stimmies, welfare, PPP, EBT, bridge cards, whatever, you name it. There's still a ton of that being pumped into the market. Higher cost of living adjustments are, gone out now, things like that. So all that's now being pumped into the market. Hence, we have global positive QE going right now. Really, this is why this has changed over the last couple months. We have overall global central banks are not tightening. They're actually pumping into the market, pumping cash. So this is fascinating, absolutely fascinating. This is why we'll keep on this daily. Talk about Clown World, talk about what's going on, but also look at the markets daily to see the dog wagging the tail, the 10-year Treasury and the DXY as we look at all the time, because these are the bellwethers. These are the things that are going to tell us what's going on. We can see these jumping here. So keep an eye on these things, and then obviously watch Bitcoin, gold, crypto, oil, Bitcoin, gold, silver, and oil. Those other, really kind of four things. Those things are what are going to tell us where markets are going as well. Really, I should say three. Three are 10-year DXY and oil, and then the others are Bitcoin, gold, and silver. Those are going to tell us as well, okay, where's liquidity going? What's happening? If those things are pumping, then we know that generally there's liquidity being pumped in the market. Again, like why Bitcoin, for instance, has gone up 30, 40% over the last month and a half, because there's been global liquidity being pumped into the markets. So again, it's an early warning system, gold, Bitcoin, silver, and then the dog that wags the tail is the DXY and the 10-year Treasury. Those are really going to tell us what's going on. Greg Foss, so I said there's one trade. It's the DXY. Everything's all one trade. It's the DXY. So that just goes to show you. CNBC, your Uncle Jim, all these different people, they always look in the stock market like, oh, I invested in Apple, your brother-in-law, whoever. No, it's not stocks. Stocks are a lagging indicator, really. They are what's derived from the global credit markets, and the DXY tells us what is going on. So dollar milkshake theory by Brent Johnson, right? The dollar kind of sucking all the liquidity up in the world over time here and squeezing everything. So, which again, at the end of the day, that can be an environment where Bitcoin goes up, gold goes up, and the dollar goes up all at the same time. I believe that theory too. Mike Maloney believes that theory. Brent Johnson. I know there's a lot of people in the Georgia Games of the world. I think there's a lot of people that believe that theory, and it's kind of been playing out over the last couple of years. So anyway, I'm gonna get off my pedestal. Thank you for coming to my TED Talk, and I appreciate you more than you know. And please like and subscribe. Actually, you know what? Don't even like and subscribe to the channel. Please just share this. Please share this with someone you think might need to hear this, might need to understand what's going on, what's really happening with the economy, and how the economy, how it works, quite honestly. So I appreciate you more than anything. And this is not financial advice. This is freedom advice. Get independent, get resilient. Bitcoin, gold, silver, money, energy, land, food, water, security, firearms, and community. Building community with the like-minded people. That's the number one thing in a preparedness survival situation, because make no mistake, we're at war. We're in a cyber war, financial war, bio war, cultural war. We're in war right now. We're in World War III. Make zero mistake about that. That's what this channel is about, questioning everything with boldness. Everything, even the existence of God himself, and asking why, triangulating positions. So I appreciate you more than you know, and I appreciate your time, because it's the only finite asset we have, like Bitcoin. Bitcoin is time, and time is Bitcoin. That's my bet. It's on the technology of the future and the money of the future, the hardest asset and computer network ever to exist. That's my bet. So that's where I've staked my bet. Not everything, but a good chunk. 20-30% of my net worth is in that, saying, hey, this is money. This is what's going on. And we do our monthly allocation, which we will do soon here as well, actually. Need to write up our new one as well. So for the monthly allocation report. I appreciate you guys, and I look forward to seeing you on the next one.